Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. Another Monday, another episode of Cycles TV. My name is Lars Fontin and I'm happy to have you here again on that session. Cycles Talk, which means if you're new to this channel, I want to analyze current dynamic time cycles in real market data with current data. Today, I want to have a look at the S&P E-mini futures and do some intraday cycle analysis. So in simple terms, let's try to build an intraday forecast for the week ahead of us, right? I mean, this would be quite standard scenario. You would ramp up every Monday intraday cycles, give you a kind of outlook in 2 hour and 20 minutes time frame to see what the cycles tell. So you get a kind of roadmap if you're in this intraday environment. I mean, for sure, you need to update your cycle analysis while we go Tuesday, Wednesday, Thursday. So I would not keep it fixed, but to make it simple for today, we will run a full week forecast on intraday cycles today, just for education. You're aware of that. So this is also kind of preview from tomorrow. We will launch the updated features and you will all be available to do the same with some automatic charting and streaming. But let's get into the subject for today. I see some first questions also rushing in. To do intraday analysis, you need to bring your own data. Yeah, like I did here in this example, this is the 20 minutes E-mini futures data set, yeah, which I have a special way to, and this is more or less Monday morning, so it's now. So these are the E-mini futures trading at today's situation. And there are different ways how you can grab that data. I mean, the easiest way, if you just do it once, you can download it from your personal charting application, upload it here manual, so do your initial analysis once a week. And we will also show you some, we call it streaming features, where you will be available to stream your own data from any charting application right into the scanner. That's how I do it. But how to set it up, that's also a topic we will discuss tomorrow and the coming next week. But either way, you can do it with the upload anyhow today or with some automated streaming we will introduce tomorrow. But that's it. Let's do some basic analysis. Let's start with the 20 minutes. I'm using a continuous contract, meaning we also include overnight data. So this is the day and the overnight information we have on the mini futures here, continuous. And for intraday analysis, so let's first how to set up our cycle analysis here on this chart. I like to use a little bit more than I usually include on the daily analysis. And that's due to the fact that on the intraday, I want to set the starting point of the analysis to an important top or bottom from the historical point of view. So that's the reason I did set the start point of the analysis to that top here. You could also use that low or maybe that top. It's not so important, but just important is to have a historical key change in trend, either a top or a low. The reason, just in short, is that if you're aware of how digital signal processing works, as it is based on some kind of Fourier analysis, and in the frequency domain, it assumes just from theory that the cycles, once they end the analysis, just start from the start again. So it's a recurring a pattern you would assume. So at the end of the analysis, which is in our terms, this is at that point. So the dark blue is the data we take into account for our analysis. And you need to aware that the digital signal processing routines, and this is every time the case if you use digital signal processing from the Fourier world of frameworks, they assume that it's a repeating cycle. So therefore, you should always use a top or a bottom, which is a kind of start of a cycle. It makes it more easy, just in simple terms, for the Fourier analysis to find the right cycles, just from my experience. On the daily, that doesn't matter, but on the daily, where more noise is also in the data, that's important. I mean, you could use the same principle on daily. Stick to the standard procedure using 3 to 4 times of the largest cycle you want to detect, so around 900 if we want to detect cycles with a length of 300. And then you can fine-tune it to the current bottom or top near that area to even make that better. But that's the reason I was just picking the start point here. And I want to see some cyclic behavior in the intraday data set I'm analyzing here. And if you assume this is a detrended data, so you know that the analyzer will detrend anyhow. So let's assume this is the trend here, and it will get detrended before we analyze the cycles. So we have some nice cyclic behavior here in this data, so which means that we have cyclic repetition. It's not just a straight line. There is some simple cyclic behavior. So this makes it a good purpose to put this into our cycle analyzer. So let's do that. Or, I mean, this is happening automatically. We see the spectrum at the bottom of this chart here. Let's take a look at the spectrum for this data set here. So, and it's quite obvious, often you find a lot of different cycles, what I tried to explain here very often, but in that case, it's easy to spot, and it's also shown in the spectrum here right on top. It's selected as the number 1 cycle. This shows up with 337 repetitions, length of a 20-minute cycle. Yeah, so you always need to treat the data correctly. 337 on a 20-minute chart. You can also now use this information to rebuild this cycle, maybe for a 1-hour chart, which is then divided by 3. Then you have the cycle on the 1-hour chart, and so forth and so back. So you can use this information. You also just need to be aware of the period. So let's use this cycle. I would skip all the other cycles from the spectrum here. You see the offset is quite large. So the difference between this amplitude top and the next amplitude top. So I would not take into account the other cycles shown here. So that's the only cycle I would think that's valid for this analysis, just to validate current or past tops and bottoms. I mean, we could check that the second possible cycle would be this length here. Yeah, but you see in general, and that's maybe also lessons learned or a key experience which I show you here. You could switch the second dominant cycle on or off, yeah, like I'm doing here now on the screen. And I'm always looking if the shape of the composite in regards to the tops and bottoms of the past does really change. And same if you have a look into the future here. So let's activate the second cycle again. And you see the outlook in the past and including the forecast, it's not really changing. So using 2 cycles, we got the bottom projection here. Using 1 cycle, we got a bottom projection here. Both show a downward move from the cyclic perspective in that area. So that's why I would then only recommend just go with 1 cycle. The more simple your model is, the better it will be for forecasting. Yeah. So, and I did the same